It's money over power, I'm on my grind. Pushing packs all the time. I'm on my grind. I'm on my grind.
I'm on my grind, trying to stay away from sales and doing time. Niggas always lying on my line. If I was blood, I would put that shit on shine. I got a son, so you know that made me shine. I got the bread, so you know I hold the line. You niggas tell it, I'm starting to think it's 69. Kick flip, push, I'm on my grind. I got a bad bitch with me, so you know I wine and dine. I'd rather have a premium contract than a prime, like Amazon. I'm on my grind. I stack and flip like a boss, more like a dime. Yeah, I'm the one, like LeBron, the chosen one.
Pussy over power, nigga, you lying. It's money over power, I'm on my grind. Pushing packs all the time. I'm on my grind. I'm on my grind. Pussy over power, nigga, you lying. It's money over power, I'm on my grind. Pushing packs all the time. I'm on my grind. I'm on my grind.
Oh boy, you ain't dumb on this one.
What's up, ladies and gentlemen? This is the recap with Let Cash Accumulate over days. Today is Wednesday, June the 7th, and the market closed mixed today. You guys, the market closed mixed, and we're going to go over the charts and numbers here momentarily, as we usually do here. You know, spot, QQQs, DIA, IWM, etc., etc. But before we go any further, you must know first that this is recap coverage from the stock and crypto market. These are live ideas of thought and studies. This is not financial advice on this stream or with this company. So with that being said, ladies and gentlemen, let's go ahead and get right into what happened. So the indices closed mixed, you guys. S&P 500 closed down about 16.33 points. Or 38% down. The NASDAQ closed down big, 171.52 points, or down about 1.29%. So that was pretty big right there today, you guys. And it just dates back to what I was saying a couple of days ago on the recaps previously here. Hit the like and subscribe button. But, I think on the recap yesterday, I did try to say, it looked like it was strong and it was going to hold. But, the Bears really did step in on the NASDAQ today, you guys, in the Triple Q. So it looks like overall I was right all along at the beginning. And the NASDAQ was just, they were looking weak. They were looking weak to me. And, they just mixed the market so much here in the past 3 days on volatility. It got a little awkward, as you can see today. Like my man punching the kangaroo is how we all feel about the market overall and how it ended the day. So that's just what it was, man. Russell 2000 closed up 35.71 points, 1.92% up. So little inversion, little change here. Instead of the S&P 500 and the NASDAQ leading the market, you have the Russell 2000 and the Dow Jones leading the market here right now. The Dow Jones closed up 91.74 points, or 0.27%. So the VIX is still going down, you guys. So overall, today looked like a pullback, you guys. It looked like a nice little decent pullback. And when pullbacks usually happen this type of way, you can expect more selling or you can expect massive buying here. It's either one or the other. This is how it is now. So, this is what you need to be expecting here. The market has really been going up here for a while, and we're in a new month now. We're not in May. You guys need to understand that too. We're in June now. Things may be changing. You got to understand, things may be settling. Things may be getting priced in for possibly the next month and the month after. You got to be thinking long term, man. Overall, in this market, yeah, you can make money quick in the short term, but you don't want to usually do that all the time. You want to find something long, and you want to find something, obviously do something else that's going to make you money to keep you in to the stock market. Obviously, like I said, this is not a casino. This is a business at the end of the day. So right now, yeah, things are looking mixed here. And it is seeming awkward here. The VIX is going down, but the S&P 500 and NASDAQ is going down with it. So it is getting a little awkward right now. But I think, weather the storm, you guys. You got to remember all the data we got here, far as economic data, and no Fed speakers. Still remember, there's no Fed speakers. Fed enters pre-FOMC meeting blackout period ahead of June 14th policy decision. That's going on. Next week, they're saying CPI data is coming out again. So think about what the market is really shifting up for right now. You may not be getting what you want, but people may be also seeing this as an opportunity, as a discount, because at the end of the day, the market is going to continue to move the direction it wants to, if that makes sense. So that's it. That's every day. That's, even after life, this thing doesn't stop, man. So you can't really be mad. You got to stay patient. You got to keep a cool mind. You got to keep a cool head. I know it's frustrating for some of you who have may just started, but the ones that have been here previously, you know exactly what I'm talking about. Like I said, it's like a train, each stop, it's a different bag. So right now, the train is basically stopped, and people are getting on the train as of right now. That's where we're at in the market. So look at it as like that, you know what I'm saying? The train will move again. Let's keep that in mind. And like I said, be positive and be respectful at all costs, because at the end of the day, you may not know someone else's struggle, or you may not know someone else's success. You may not know how someone has got to the point where they have gotten to and how they did it. You don't know that. So all you know is yourself, and try to focus on that. And that's really it. But other than that, let's get back into the economic data this week here. You see jobless claims data tomorrow is going to be very key. That's really all the market kind of has to depend on now. We don't have any Fed speakers until it looks like possibly next week or June 14th week. Who knows? But there is no Fed speakers this week. And you're seeing how the market is playing out. It's just really consolidating and going down doing what it wants, going down at a pace where investors and traders are not liking it, obviously. So you're seeing a lot of downside action here in certain names. So we're just looking at everything here, obviously, but they're seeing that the Fed speakers are not speaking this week, and the market is acting the way it's acting. Shows and says a lot here overall here. So you should be paying attention to that correlation. But jobless claim data is the really key thing here to be focused on tomorrow. And like I said, there's really not that much data to be going off of. Consumer credit, trade balance, the market kind of brushed that off, but it went down actually. So it's still mixed right now. It went down to the point where they found support, and we're just consolidating. Not too much of a down day, but it did go down. But the support did step in, so that's where it is mixed, because people are looking at it still from the upside. So you got a little mixed market right now going on. Jobless claim data should push it to the direction that the data is stating, and that's just how the market plays out. So be looking out for that in the morning before the opening bell. Top 5 things to know still. Fed blackout period, like I said, we're looking at that sharply. US ISM service PMI already happened, and all these earnings are starting to kick off here. GameStop went after hours today. We're going to take a look at that chart here momentarily. And we're looking at NIO still coming up this week, you guys, and DocuSign. Be on the lookout for that. And Apple still having that event go on. Notice Apple is still in the same area from where the event started, from where they were at all-time highs to where it sold off at. Apple's still there right now during this event. So the event is really it's making Apple shaky right now. It looks like investors they see a bigger opportunity. And it could be a possibility, man. Apple could pull back to 150. So as a share price. So be looking at that long now. As they're saying, one stock to buy, one stock to sell this week. Buy Apple. Yeah, they could also be meaning buy puts. So just be looking at it from an open mind, both perspectives, obviously. But Apple, yeah, it's something to look into, man. At the end of the day, all that product is going to get sold, no matter what kind of price they put on it. that product is getting sold. So just think about it from that perspective, and just try to correlate it from what you think can possibly happen in the future. That's how I go. But sell NIO, that's what they're saying. So we're going to be looking at that earnings play. That's an earnings play. NIO is this week, so we're looking at that closely this week. Three things to watch this week on Wall Street. We're looking at the data, obviously, tomorrow. And we see the Fed has gone quiet. We see how the market is acting like a kangaroo, is wanting to play both sides. It's really a lot of frustration right now. And not even, just with the market, but a lot of other things as well, as far as politics and just other things that are happening, outside of the market, obviously. So just really just seeing that, like I said, the Fed going quiet this week. They're not, those Fed speakers, they're on vacation. OPEC plus fallout. And like I said, that is going crazy. Saudi Arabia to make an additional voluntary cut of 1 million barrels of oil per day as part of new OPEC plus deal. And the gas stocks are right back up, you guys. They was up today while the market was mixed. So they were part of the green today, you guys. The gas stocks like Chevron and ExxonMobil, like they're all green due to that right there what Saudi Arabia did. And that news came out Sunday night. So it is here Wednesday going into Thursday. So it's just something to be looking here now going into next week about that oil. It could be a possible big change coming in the oil, you guys, soon. So just be on the lookout for it. Basically, it was just the start of it here the past couple of days. So still an opportunity. But let's go ahead and get into the charts and numbers. I ain't going to hold y'all, man. I ain't gonna hold y'all. We ain't gonna go over this too long here. You know how we like to do it. LCAOD, real quick, fast, and simple, because this is not hard. This isn't hard at all. Is literally at a 5th grade level. You could be doing this. But let's go ahead and get started with the SPY here. So 426.55. That's where they closed here, obviously. That's where it's at. That's what the chart is indicating. And zoom out 5 days right now. I need y'all to see what's going on here. This is the top. The top is in. You see that? The top is technically in. Now, we could have where, obviously, you see here, there was a dip. And then what? Dip. And then they brought it up here. They brought it back here. To the point where they even brought it back here. You see the pattern? We're right back in here in this section here, you guys. This is where the market is becoming a kangaroo, because we have been going up and down in the same area here in this circle motion right here that I just drew out for you guys. So right here, this is where the market is a kangaroo market right now, you guys. That's why I'm telling you the indices are mixed. It's a kangaroo market. The SPY is literally the past 3 to 4 to 5 days been up here in the air just chilling. And this isn't a safe zone to be up here at these highs technically, and we haven't been here in about it's been about 2 or 3 years at this point, year to date. So year to date speaking, 1 year ago, you see about 1 year ago when we were up here coming into March of April to 2022, it did reach that high right here. 455, the market did, but from right here where it's set right here, it did go up from 428 to 455, but it did sell off back right here to this area of 435 till it got rejected right here for 42. And this was, I'm telling you, about a year ago, you guys. So that's kind of where we're at right now. But that was the last time it actually consolidated in a high area. Now, the market basically from that point on, you look here, it really hasn't done that since looking from where I'm circling at now, from April, the end of April 2022, going into May, back to August there. It tried to retest it, but failed again, back to 353 down here to the downside. That's where we were talking recession previously in 2022. So I'm just giving you guys a little glimpse update here. If you're new to it, or if you know it, it's still a good reminder here. You need to be paying attention to what's going on here, so you may know what's going to happen next. But at the end of the day, you guys, like I said, the market did pop back up here at the beginning of the year this year, pretty much, and got rejected again here. And we just kind of, from the beginning of the year, the market has held up. I must say that. But this is the first time since, like I said, about a year ago, April last year, that the market is looking like it's trying to consolidate in a high area. It's trying to consolidate in the air. Consolidation is just, like I said, going back and forth um, until it breaks out into a direction. That's all consolidation is. So when you hear people say, "Oh, the market is consolidating," it's consolidating. Yeah, that means it's staying in one spot and it is about to break out. So you should be having your idea set in place. So that's just pretty much what the SPY is signaling right now. They're consolidating very hard, you guys. They're the trick, trap, fool, and frustrate crew. They are in it to win it. That's all I can tell you. They don't want you to win. They're in it to win it. So you have to be playing a patience game. It's a mind thing too. About just knowing when to enter and knowing what to do once you do enter. So that's really all that matters. But like I said, the SPY right here, you guys, is consolidating right here in the air. Not a safe zone, like I said, because this is a lot of free land fall here that could easily happen within the next couple of weeks with that Fed policy decision, whatever the case may be. This is a lot of free fall area here. That's why I'm just drawing a lot of little lines so you guys can see to get the picture here. The market can fall right in here in this area where I'm coloring. If things continue to look shaky right here at this top, this circled. So just be on the lookout for that. And that's what everybody means by direction here. The market is going to break into a direction, whether up or down. And obviously, the up direction would be above this here. So it would be just literally that 430 to 432, 434 level on the SPY. That's literally all they have to do to continue all of this right here, momentum right here. That'll show that if they can just break above 430 and get to 434. You see what I'm saying? It'll be a new high. It'll be a higher high. So market obviously at these levels can go either way. The SPY can go either way. From the one-day perspective here, we're gonna focus back in, just giving you guys a little glimpse here of what's happening here, and this is taking place overall in the SPY, Triple Q's, DI, IWM. Those are the main sectors where every company, they're all together. They all correlate. So you got to be on the lookout for that. But upside level here, like I said on the SPY here tomorrow, obviously. If you're bullish still, the Bulls, I'm gonna be real with you today. They lost momentum. The Bulls lost momentum. I was gonna say half momentum, but I'm just be real. Actually, they lost momentum. It's still a bull market. Don't get the momentum and the market confused on. Those are two different things here. We're in a bull market overall because of the numbers, but the chart is signaling to the downside that they have lost momentum. So that's what I'm stating here. As far as Bulls did lose momentum today, you guys. At this point, Bears are in control as far as momentum, meaning they can get more downside if they need to, because there is a gap to fill below. So we're looking out for that. But here to the upside, if the Bulls want to regain their momentum, they need to just go ahead and break back above 428. You get back above 428, I think this time you must break that 429. It's a lot of resistance right here, 429, 50, and 60. So you break that, that's the level to beat right there, and that takes you straight to 430. And from 430, if you can consolidate there, and that it wouldn't matter because the Bulls will have the momentum back. You get what I'm saying? But if you catch them consolidating higher highs, the next level of resistance isn't till 434 to 435. Remember that it's still their target here to the upside on the Bulls. So even though the market's mixed today, don't mean it's gonna be mixed tomorrow, or possibly next week, or the week after that, or the month after that, or you get what I'm saying? The market can definitely the Bulls can still hit that target right here. So we're looking at the upside level right here. These are the upside levels still, and to the downside right here on the SPY. Obviously, like I said, they got momentum. Bears got momentum, obviously. So to the downside, here, I'm expecting 425 to break now. If that doesn't hold the next level, I know is going to fill that gap at 423.20 to the downside. Now from there, it'll be up to the Bears to really flush this thing back to 420, which they can, because that's a target, and that'll really show strength far as the market may be flipping back to the bears if they do that. So we're looking at that closely now, just to see, if they even get their gap fill with the momentum. So they may just get the gap fill, not the momentum. But we're looking at it from both perspectives, obviously, and that's the downside levels on the spot there. Triple Qs, triple Qs, triple Qs, you guys. Same thing. Same thing. Not the recap from yesterday, but the day before that, I did state that the triple Qs was looking weak. I did state that. I noticed that here, and I caught it here. That candle right there was that wicking candle that didn't fill. You remember? That was your signal right here. Remember? It was a wicking. This one right here. This was your signal that the triple Qs was getting weak, you guys. So they did even push above and fill that candle though. But like I said, it was weak. It sold off that same day. Gave it right back. So since then, we haven't tried to do that again. It actually tried that again this morning, but that wicking candle again, this one didn't get filled. This one actually took them to bare land. So the triple Qs is really lost their momentum because this is where the Bears are they're screaming in excitement right now over here at the Triple Qs because they only wanted 350. The Bulls actually gave them a couple dollars more. So Bears only wanted 350, but they actually got 348.82. So Bears have full momentum right now in the Triple Qs. And Bulls got to tighten up right here. If not, this thing will pull back more because there's a lot of pullback that's needed over there. It was a lot of rallying in May with the NASDAQ. And it looks like, today, like I said, 350 has made it even here at least. But now it's getting critical because they were low 350. So are they about to feel the next level here, which is 346? That's what you got to be looking out for now. Because if that don't hold, then now for a fact, 340 over here is definitely back in play on the Triple Q. So, like I said, right now, charts are stating Bears got momentum here. Still a bull market because this is high. 348.82 obviously is pretty high for the NASDAQ. Still a bull market. But momentum-wise, Bears got it. So, levels I'm looking out for tomorrow, you guys, here on the upside. If you're still bullish on the Triple Qs, they must get back to 351 there. If you don't get above 351, I don't know what to tell you, but you should get to 351. And once you get there, you're going to have to get to 353 next there on the Triple Qs to the upside. I think that regains your momentum back, and then people see it from a bullish perspective again. And then this time you really, since that was a big steep, I'm seeing now the big pop, the 366 is still back in play here. You can rally this thing back to 366. That's still their target there, obviously. It might run straight through it now, like I said, since they actually gave the Bears a little bit more. The Bulls could really do that here now going into tomorrow or Friday. So we're looking at this closely, and even possibly for next week as well, though. Long term, obviously, all the time. But that's what the Triple Qs are still going to have to do. But first things first, like I said, you're going to need to get above 351 to 353 to even regain that bullish start first. To the downside, though, here, since the Bears got momentum, they're your winners right now. The Bears just need to claw on down here to 346. You get it to 346, I think 345.50 breaks, and then you may see consolidation there. I think it gets real critical right here, though, for the Bulls. It's a lot of pressure right here. So if this doesn't hold, you'll probably see a sell-off right back to 342.50 to 340. And at that point, that correction I was telling y'all about too, right, on the Triple Qs and the DIA is definitely in act right now. It just started today, possibly. If you see another $6 down tomorrow. So be on the lookout for that there. Triple Qs. DIA. So it looks like I said, man, that inverse correlation is taking place. Meaning, like I said, it's a correction going on in the market. The Dow Jones indices, if you're just now tuning in, hit that like and subscribe button. But if you heard me say this before, you already know what I'm about to say. The Dow Jones index is 30K. The Triple Qs, the NASDAQ index is 13K. It's no way the triple Q should be higher than the Dow Jones on share price. So you may possibly be seeing a correction coming here. That's just why you saw the massive sell-off today at the NASDAQ. They're trying to come down and match the numbers, you guys. They're trying to match the numbers to make it make sense. You saw the Dow Jones, right? It actually was strong today. It was bullish. It held up. It's going to do that because it's strong. It's the strongest sector in the overall market. So it is what it is. So yeah, you guys, numbers don't lie. But the Dow Jones, you guys, they definitely are holding up here. They're looking really strong bullish. They got back to 337. So to the upside here tomorrow for them. I'm just looking for that break to 338. You get above 338. I think you really take it to their target level is 340. They want to hit 340 on the Dow Jones. And you may see a rejection there, or you may see a pullback up there to the upside to 342.50 in consolidation at that point. But that's just the next goal there for the Dow Jones there. Those are the upside levels that they're looking out for it to hit next to keep the bullish momentum going. Now to the downside, obviously, the Dow can sense a weakness in the overall market if the triple Qs and the SPY can continue to sell off like they did today. The Dow will sense that weakness and it'll go down too as well. So to the downside level I'm looking out for is 336.20 here to the downside. That don't hold. The next level is 335 to the downside on the DIA. You're going to need that to hold because if not, there isn't any support till about 332.50. So keep that in mind, you guys, on the downside levels for the DIA. IWM, super bullish, you guys. Super bullish. But let's take a little peek here before we go. Let's look at GameStop earnings. Clapped. GameStop went down for earnings. So IWM may be about to flip in the morning. Just considering that, GME is in the IWM. So they probably will be IWM will possibly be giving some gains back here. They had a tremendous rally today. They haven't traded at 187 in about a year or two, possibly. So when was this? March. Let's see. March of this year, it sold off from this area. So yeah. So you see what I'm saying? So yeah, it's been about a year actually. By December when it was traded up into it. You know what I mean? So about a year, like I was saying. So yeah, so the IWM, like I said, hasn't traded in this area in about a year. So look at that. But the earnings right here that's staying in the IWM, right here, GME is a big one, and it went down. So I expect some gains to come back here. Maybe they just got a little bit too happy. Maybe they're just trying to rotate the rally too as well. You've seen the S&P 500 go crazy, and you've seen the triple Qs go crazy. So now you're just getting a rotation in the sectors right now. That's really all that's happening too as well. So it's really, like I said, it's patience, man. It's really about patience. But these moves are taking place, though. They all over the place. I understand. That's why I say you got to pick something here. You're not going to be able to catch it all. Obviously, I'm giving out the information. I'm not catching it all, but I see it all. But I mean, I have clients that they are my they mimic. They are people are catching it, and that's awesome, and that's what I do this for. So at the end of the day, you guys, IWM was a bullish move that I told you guys it was coming. 187 was coming. You never know. They may continue this momentum here. So I am looking out for both levels here to the upside tomorrow on the IWM. I expect it to break above 188.50. It could do it. It's the IWM. At this point, we done rallied here to 187.58. The next level should be 188.50 to 189. If you break through that now, the IWM is taking you to 190, their target. Their target is 190, and then they'll try to burst through at 192. That's their next target. So these are the next two targets here to the upside on the IWM. They're just about at it there. So looking real good and strong here from right here. Like I said, March of this year. This is what it looks like where the sell-off started. So if you break above that level, it's really bullish. You got to start looking at the IWM to be trading back in that 200 zone. So we're looking at that as well here, going long on the IWM. Like I said, they can definitely trade in that 200 zone. So just be looking out for that there on the upside, obviously. But to the downside, like I said, it got to make sense too with the earnings some GME didn't go up, so IWM may pull back a little bit tomorrow. That's the only reason I'm saying that. And so to the downside, I see the IWM coming back down here to about 186.60 here to the downside, a little pullback. And then that doesn't hold. Next level is 185.20 to the downside on the IWM. And the next level after that, once that doesn't hold, is 184.20. And you will see consolidation there at that level from that point. If that don't hold, possibly you may see it get back to 182 here on the IWM. So be looking out for those levels there to the downside. And like I said, their target here to the upside is 188.50 here. You got to break through that to get the 190 to 192. So them the upside levels there for the Bulls and downside levels for the Bears right there on the IWM. VIX, 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 VIX. Volatility still going away. Still going away. So market makers are funny. They're interesting too. They're interesting. Sometimes I do these recaps and I swear they can hear me. But it's okay. I could be, just me in my head, but whatever. But I did state that there would be a red candle right here, and I did say that the market was going to go extremely bullish. Obviously, that was wrong. That was wrong. And considering that was wrong, because you see that it did make a red candle here to the downside, a little small one, but the market is mixed. So obviously, the market makers can do what they want to do. When I'm telling you guys this stuff, I'm not 100% accurate. But far as reading the charts and things of that nature, and the charts and numbers and understanding information, I can understand why the market makers did what they did here today to try to make me look like a fool. But I know for a fact what I'm still saying is actually going to be correct here. The market is just volatility. It works at its own pace. You're learning about volatility as it's moving. It's the speed of the market. Yes, everything in the market. It's the direction of the market, but at the same time, it's the pace of the market too. It moves at its own pace. It does its own thing as well. It doesn't have to always go to the point where if the VIX down, the market should be up, or if the VIX is up, the market should be down. No, that's not how it always works. There's a thing called debit spreads and credit spreads. You got to understand what you're getting into. The market it's all about rotation. So right now it's the market is the VIX is technically consolidating with the market. That's what you're saying right now. You're saying the VIX consolidate with the market, but obviously it's still those same terms still matter. The VIX going down, the market's up. The VIX going up, the market's down. That still is pertainable to what's going to happen when it does make the breakout move far as from the consolidation. So keep that in mind about the VIX, you guys. That's just what the VIX is. Yeah, it is still going down and it's mixed right now. Notice that. So from here, obviously here, the next levels I'm looking out for on the VIX here to the upside. That's a lot of red candles here. So to the upside, it looks like the VIX is still staying in that lane here as well. Far as the lane this way, and then it was a lane going back to the upside over here. It looks like the VIX to the upside tomorrow though possibly will take us back here to $15. Green candle right here. I think if you see that, you will see everything red, not everything mixed. And that's what investors really like to look for. They like to see one color across the board. It makes the trading day, the investing day easier that way. So if you do see that, expect the market to pull back tomorrow for sure. You're getting close here towards expiration here. Contracts are expiring here by Friday. And some tomorrow, the ones that, if you're doing ETFs. So keep that in mind. It's going to be a lot of volatility here. The VIX has been basically is oversold. It's super oversold at this point, to the point where you're not even seeing the market go up. So the VIX is super oversold. So expect a spike up here, as you saw here. Hopefully not nothing that we saw here in 2020. I'm gonna circle it. Hopefully not that, but expect something in that nature here though coming soon on the VIX here. The chart is screaming that. So that's what I'm expecting there, the upside levels on the VIX. Now, if not to the downside, I'm going to continue to say this. You will not continue to catch the VIX continue to make, okay, say if they make a candle here to the downside, I'm looking out for this. If they make another candle here to 13, remember, because look, if you really look at it, it just made a little small red candle. It didn't make a long red candle. If it would have made that candle, a long red candle to 13, you actually would have seen the market go up today. So the VIX kind of played a part in not doing anything. So that's why you kind of just had the market slowly go down. Now the NASDAQ, went down a little bit faster. They were the most overbought, so that's why. But other than that, that's what happened here. So just expect, like I said, though, if you see the VIX make a long, you see all these red candles right here. If it makes another long red candle to the downside here at $13, you will see the market go up. You're not gonna catch too many discounts. I can promise you that. So just be on the lookout for them levels on the VIX, you guys, and be looking at that strongly to see if they make another red candle beside it, and if it does, then the market may not be doing anything still, like you just saw today, or if they make a green candle above it or a red candle below it. So be looking out for that tomorrow, you guys. Caterpillar. Oh my gosh. Caterpillar. Oh man. Wow. So they heard me. Something they heard me on this one. They had went in and put their little buy orders in for their tractor trailers and their forklifts and everything on Caterpillar. And they're getting that construction out there early going on, starting now. It's buildings getting knocked down by Caterpillar. And it's a bunch of stuff going on with Caterpillar, man. They do a lot of stuff, man. You just seen Caterpillar. They're in the Dow Jones too. You seen the Dow Jones up? They just went full bull mode today. Full bull mode today, all day. Not even thinking about the overall VIX or the market or nothing. Didn't care. It was in his own zone. Caterpillar was 227 to you got 236 there. That's basically a 9-10 point move. So contracts are super up over there at Caterpillar. Expect some profit taking here, or if not, upside levels I'm looking out for here now. Caterpillar is full back bull mode here. That was a tremendous comeback there. They just did. They just basically went from 205 to 235 in the past 5 days. So that is a tremendous bullish move there. Now that 700-point move with the Dow is accumulating now in the overall market, and you're seeing that. Now there's a gap fill right here. You see it's a gap to fill right here at 239. So the next level I was about to tell you guys is 239 to 240. Expect that right there. 240 is their target. That'll fill the gap. So you can see that continuation going tomorrow with Caterpillar, you guys. They're strong. But be looking out, see how it plays out, obviously, see what it gives you in the morning, see what what kind of candles they spitting out early, you know what I'm saying, and playing from there. But 240 is their target, you guys, to the upside. To the downside, obviously, like I said, it could be some gains getting giving back here, considering people are going to hit the sell button. That was a tremendous move here. If you held here from 220 all the way to 235 now. So that was, if you would have held for a couple days, that's a tremendous move for you. So it probably will be some profit taking. So to the downside here, I expect to pull back to 232. And if that don't hold, the next level is 230. Now, I do see consolidation here at 230 now, though, you guys, hit to the downside before you possibly may get that break back to 225. But 230 is their new target on the Bears now. But 240 for the Bulls there on Caterpillar, you guys. Apple. Oh, sour apple. So Apple still being a sour apple. I need to stop calling them that because it's like they've been sour every time I keep saying that. So we're gonna say Apple. They're down here at 177.95. That's where they closed, and like I said, really due to their all-time highs in their event that kicked off and they showed all their product, they just sold off since then and just been consolidating from where they sold off at. So Apple's still in the point where they're about to make another move, obviously. Could be brought right back up. That's what you got to be looking out for now at this point with Apple, you guys. Or, at this point, it'll be more selling, like I said, to that 172 level, as I've been telling y'all all week anyway. So it's still in play. It's either back to 185 or 182 or back to 175 or 172 at this point with Apple. That's just where they have to place it. Looking at the charts here and the numbers, but you know, just keep in mind, like I said, you might want to long Apple in whatever decision you make. Zoom out on the chart, and when in doubt, zoom out 1 year, 5 year. We are peaking here. We're at the top here. That's a red candle. That could be signaling bearish here now for Apple, considering how this looked. And then they sold off back here to 149 here over time. So look at that from that perspective. Then, you know, like I said, obviously this thing is Apple. You know, it might be time for new, fresh all-time highs like NVIDIA. This did. You just never know with that AI stuff. Obviously, that product that they want, people want for the headset that Apple is providing, that's not coming out till next year. So that's what I'm saying. You want to be thinking long on Apple. Right now may not be the time. Maybe you might want to, you know, like I said, to just long it, to really get your idea of where Apple's going, you guys. But from the 1 day perspective here, the upside level, like I said, I'm looking out for here on Apple is they need to go ahead and get back to 178.80. They get there, next level is 179.80. And their target at this point, the Apple want to get back to 180.20 to 180.60. That'll just give them the bullish momentum back, and that'll put them back, like I said, confident enough to possibly try that all-time high thing again. And the next level above 180 is 182.50. So that's Apple's high side targets here, still in the short, near term, mid-term, as the market continues to stay right here in this area. So just keep that in mind. Now to the downside, obviously here, Apple, like I said here, been playing like they about to flush. So it looks like sometimes, you know, the toilet does get flushed. So the Apple may flush here, you guys. So be looking out for a 177 even break. If that don't hold, the next level is 175 to the downside. That don't hold, you guys. The next level is 172.50, and then you'll get your consolidation. That's the bear target. You'll get your consolidation there to the downside. Google, ooh, Google, good googly moogly. We're just talking so highly of them, and they just did it again. They just gave it all back. So Google, that's actually good. You know, good. It's, you know, they're showing that they pay, obviously. So you just got to be prepared for which way. I mean, at the end of the day, so that's just how Google play. But man, Google, you guys, that is wild. They sold off a lot today, 128 to 122, man. So still a cheap AI play. Obviously, they're back at 122. So my point proven about them being a cheap AI. You know, they've been had their little Google headsets with the HR that Apple's presenting, trying to present that. Google said, man, they been had that. Google been already had that, bro. They got everything at Google. Y'all just not understanding the discounted price yet, but y'all gonna regret it soon. And that's what Google's screaming out. But you know, a little pullback. Due to obviously NVIDIA sold off a lot today too. So of course Google gonna try to come back as well because they don't want to, you know, seem like they're trying to be catch up to them or be expensive yet. So their AI stuff is still a lot of questions and a lot of stuff about it that's in play with it. But obviously it had its bull run in May. June is looking like, okay, now what's the side effect in June about AI? So that's what we're kind of getting now, and you see a lot of AI stocks starting to sell off and pull back, and that's overall it's touching the Nasdaq the most. But Google, like I said, still a good company. That's a tremendous move. You could have caught puts today; that would have been wonderful for you, like I said. So they're actually paying either way. But to the upside, you know, Google here looking at the upside level is 125. You guys. Is the upside level they should try to get back to and consolidate. I think that gives them the bullish momentum back. And then, you know, if you can break and still get back to your target, because you did hit your target, but you sold off in it, you got to get back to your target at 128 and push through to 130 to 131 this time. Now, I think that's your next upside levels on Google here, coming soon here. Now, to the downside, Bears won this. Bears got momentum, you guys, as the Bears got momentum on this one. This thing is flushed here. Look where we're at now. This thing is flushed. You got to look 5 days out. We're back where we kind of started here. So Google now, you got to start looking about 1 month out. And, you know, if so, you know, to the downside levels, obviously, where they're heading here, it looks like 120 next would be your next downside level there. And I think the the bears will be happy there because that'll be back over here in this area. And then I think from there you'll see consolidation here. So next level to the downside is about 120 on Google, you guys. If that don't hold, you can definitely see Google back to about 117 to the downside. So I'm looking out for that closely on Google, you guys. But that's pretty much it. That's what we're looking at over here at LCAOD, all of my clients and this company. So, hey, let's get it, man. I'll see y'all tomorrow with another recap. And pretty much, like I said, that's it. Just be prepared for those levels. The market is mixed right now, but be patient, trust and believe. The breakout is coming soon, especially here before the Fed pop back up into play. The move is coming here in the market, you guys. So it's just the consolidation is about to break out. So just stay patient. But let's go ahead and look, like I said, we'll look at a couple earnings names real quick before we go wrap it up. GME, they did sell off. Look at that huge red candle there, you guys. So GME went from 26 to 21. So that's going to hurt the IWM in the morning unless they pop back up. And, you know, that'll hurt the actual bears. But as of right now, the bears won this bet. And GME is down here. GameStop is down. Looks like they're not really selling any games or anything. So I don't know. Yeah, that's just what it looks like. That's what the chart is saying. So GameStop is down, man. Everybody's digital with their games now anyway. So kind of expected there. It just had that pop in 2021 that it was just I don't know, man. I don't know what was that was about. That was just an algorithm glitch, some people may call it, or whatever. I don't know. But from 7 cents to 116, really, I almost found out that was a crazy move back then. But yeah, today GME went down, you guys, on their earnings report. So ouch. Look for possibly continuation or see if that pops back up there to going into tomorrow, you guys. But that's it. Like I said, we'll pull up the earnings for tomorrow on tomorrow's recap. But that's it, man. The indices right now, let's see what they're looking like before we slide. Let's see. Indices are looking like, wait for it. Let me reset my Wi-Fi. Let me get back on the Wi-Fi. And now I'm back on the Wi-Fi. Now I said I'm not connected to the internet. Now I'm back on the internet. Wait for it. It's loading. Stocks futures are a little changed on Wednesday night as rally hesitates. Dow futures are down here. S&P 500 is up about 2%. NASDAQ up about 1%. So it's still mixed, you guys. It's still an up feeling right now. The oil is chilling out, but it's high still. So, oh yeah, that's what I did want to show y'all a couple oil stocks real quick before we go. But yeah, I got to show y'all what the oil looking like here. But New York City tops world's worst air pollution list from Canada wildfire smoke. Ooh, so that could have a bearish effect in the market, you guys. In New York, think about the stock exchange, and you got the worst air polluted. While that's open, that could cause a lot of people not to go into work. Could be real bearish at the end of the week. That's something to look out for. Ooh, didn't see that until just now. So Wednesday night, as rally is hesitating right now. The rally is hesitating right now. It's looking a little cautious right now, you guys. The risk is not looking worth it right now to the upside. So, hey, let's look at the gas real quick though. I want to show y'all, since they announced that this is the top gas stock. This is Warren Buffett owns this. So I'm just looking at them. So that information, remember, got announced on what? Monday to Sunday, right? Sunday. The information got announced Sunday. Since then, 153 right here. Now look at Chevron 159. So you see that pop right there. The gas looks like it's going back up, you guys. So be checking out your local stores to check out that pump price, see what that's moving like. But it looks like gas is going back up here, you guys. It's sitting right back up here at the highs again. And then, you know, it can really retrace right up here. Chevron could 166. So looking out for that. That's just another free play just throwing out there for you guys. Be looking out for Chevron, you guys. But that's it, man. We're going to wrap it up. I'll see y'all tomorrow with another recap. This was the recap with LCAOD. I'll see y'all tomorrow, ladies and gentlemen. Peace.